Holding Bitcoin for the long term is the highest upside, lowest risk strategy we can pursue. Some people think diversification means buy other types of cryptocurrencies or buy other kinds of equities. We think that by holding Bitcoin, we're diversified because we can see Bitcoin sitting on the balance sheets of cities, states, governments, companies, small investors, big investors. And ultimately, we think Bitcoin is going to be the core to big tech innovation at Apple, Amazon, and Facebook. So we just want to be holding the Bitcoin. There's never going to be more than 21 million of them. And we think that every investor and every company and every government on Earth can benefit from Bitcoin.
So there's Michael Saylor's latest update on Ethereum. Now, in stark contrast, here's Raoul Pal just this week with his opinion on Ethereum.
Well, my biggest bet, I think the biggest, clearest bet of all is Ethereum. If you say, if you could only own one asset over the next 12 months, what would it be? It'd be Ethereum. Because it's the least risky with the highest rewards. Because of the massive changes happening. I understand there's risk that may not go through in the way, the format people think, and there's some other, questions being asked, and that's all fine and good. But I think probability is that you're going to end up with a reduced supply, massively increasing network usage, interconnectiveness of that network, and then you're going to go to proof of stake as well, which gets rid of the green argument. I think you're going to see institutional investment in the space. So I think ETH is the single bet that there is right now. Just trades like shit right now, so it needs to get some traction. But it feels like we're in for the double pump, the 2013 repeat. Ethereum versus Bitcoin, and looked like it was going to start outperforming, just a chart pattern and a hunch. And then I started digging into, okay, how do you value Bitcoin and Ethereum? So we've had the stock to flow model, but really what it was to me was also a network. And you use something called Metcalfe's law to value a network, which is basically a network has value proportionate to the number of people on the network and the number of interconnections they have with each other. So I could see that in Bitcoin, and you could pretty much prove it out by putting like number of active wallet addresses and the price of Bitcoin on a chart, and you basically get a very high correlated answer. And I could see people attacking anybody who talks about Ethereum or other tokens online. So I'm like, I need to find out how you price Ethereum, because I have a feeling it's exactly the same as Bitcoin. And what was interesting is I used the same mechanism and it's priced exactly the same way. But what was more surprising is the adoption of Ethereum was much faster than that of Bitcoin at the same stage. So I'm like, wow. And then you start realizing the number of things being built on it, the applications, the number of developers involved, and the speed of the increase of the number of users. So there's a lot of interconnections plus a lot of users. That was going to become very valuable. So then add a chart onto that again. Chart of Ethereum looked like it was going to break out, and that gave me everything I needed.
And how are those charts looking now?
Well, they continue to show that, even Ethereum has been having more volume in certain days than Bitcoin has. The wallet address growth is faster than Bitcoin. In every way, it's outperforming Bitcoin, except in market cap. I think we call it the flippening when Ethereum is larger than the market cap of Bitcoin. That's nothing to say that I don't believe in Bitcoin. Bitcoin is a different thing to Ethereum. Many hardcore Bitcoin believers think that all applications will be built on the Bitcoin blockchain. But I think that's more a hope than a reality. The reality is many different ecosystems will get traction for different things. And Ethereum right now has DeFi, NFTs, social tokens, all on it. So it doesn't have to be money. The next part of the equation comes with the introduction of the EIC 1559 token, which essentially lowers the supply of Ethereum by burning Ethereum. And then there's the ETH 2.0, where we move to proof of stake, which again, will lower the gas fees, but also will lower the supply even further. So it becomes a super scarce asset with massive use. So probability is it's going to do pretty well. Yes, my target is still remains between 200 and 400,000.
For like, in what time?
Probably the next, I think this cycle extends somewhat. So I'll give it the next 12 months.
And for ETH?
At a minimum 20,000.
And would that mean the flippening would happen?
No, not quite.
Later.
Yeah, not quite. I don't think the flippening happens this time around. I think it happens maybe over time. So let's see, but it could do. Maybe the ETH 2.0 drives the flippening. Maybe it's a short-term boost. We have huge speculative blow-off, collapse. You know what crypto's like. It's not very predictable in short-term time horizons. So it kind of goes where it goes. But if you say to me in 5 years' time, does ETH have a larger market cap than Bitcoin? Probably. In 10 years' time, I have no idea. Maybe Bitcoin gets more traction in central bank or reserves or whatever, or maybe other protocols eat away at ETH's lead. We don't know. I'm not a certaintist about any of this stuff.